This episode is sponsored by Launch. Are you an insurance agent that is tired of quoting business to try and find a better premium to win new deals? Are you looking for a way to differentiate and stand out from your competition? Well, look no further than Launch. Launch is an industry-leading software platform that gives you pre-built assessments that you can walk through with your prospect. Launch automatically calculates your prospect's risk score, and this allows you to show your prospect the areas you can fix to negotiate better premium and coverage with underwriters. Offer more value to your clients, turn missed sales into closed business, and most of all, become a better advisor to your clients. Visit getlaunch.io today to get more information on how you can use Launch to win more BORs starting right now. That's getlaunch.io to learn more.
Welcome to the Getting Past the Premium podcast, where we focus on breaking down risk management problems bit by bit until we find a solution. If you would like to discuss anything you hear on GPP with us, please reach out using the links in the description. Enjoy today's episode.
Well, welcome to the show, Dean. Thanks for hopping on.
Thanks for having me, Elliot. Good to be with you guys.
Yeah, Dean, good seeing you again.
Yeah, you as well, Ryan. Thanks.
You got some big travel coming up to Europe, so that's exciting. Maybe with that context in mind, tell everybody kind of what you do, who Assurex is, kind of start there, and then we'll jump into the show.
Yeah, sure. Thanks. Appreciate it, Elliot. So Dean Hildebrandt, President and CEO of Assurex Global. Assurex Global is the largest consortium of brokers, privately held brokers in the world. So we work with 50 North American firms and 50 international firms, so roughly 100 partner firms. The firms actually own us. Assurex is an entity owned by the partner firms. They are our only clients and they are our only shareholders. So we work incredibly closely with those privately held firms, building tools and resources to help them compete very effectively against the likes of Marsh Willis Aon and all the big brokers in the world. So our constituency is pretty narrow. We work with privately held brokers and a very select few of them. But it's a great vantage point in the industry. It's truly a passion project.
Yeah, absolutely. And then in a prior life, you have had a variety of different roles, right? But you've been in agencies, you've ran agencies, you've kind of done a lot of every stage of the growth of an agency, right?
Yeah, guilty as charged, Elliot. I mean, I started at an agency that was about $1 million of revenue when I started there.
Can you tell that story real quick of what you thought you were getting into?
Yeah, I mean, it was just a little different than I thought. When it was described as a $10 million agency, I kind of thought that meant a $10 million like a manufacturing entity or something like that. So a pretty substantial entity. Well, it turns out 10 million in premium is 1 million of revenue, which meant we had about 10 people or 12 people or something like that. So the entity I joined was a bit different than I necessarily thought coming into it. I just really didn't have much experience in this industry at all, so I didn't know. The gentleman I worked with, though, a guy named Rick Amon, phenomenally good man and really great business partner for a long time, and we teamed in that entity for 16 years. We worked together for 16 years. And when I started, it was just over $1 million of revenue. When I left, it was about 30 million of revenue, right in that range. And we sold to a publicly traded bank, Associated Bank. I actually went forward as the go forward CEO as well, and was there for just under 5 years as well. So I started out at a firm that was about $1 million of revenue. When I left, my reporting structure was about 140 million of revenue. So 21 years essentially in the same role, the same time, with a phenomenal group of people and just a great team to be with every day. And we had a lot of success and a lot of fun with it. But yeah, I've kind of seen all parts of our industry from a broker perspective. I certainly have been on the distribution side of our business, or the good side, as I like to think of it. I'm now with Assurex. I was essentially leaving the industry. I was going to go teach college at Arizona State, and this opportunity came up to join Assurex, and the Assurex group of partners is just such a wonderful group of people, and run great businesses, and I just couldn't pass up the opportunity to work for and with that constituency.
Yeah, definitely. I love that you dove into that. I think it's such a great story. Nobody ever actually thinks they're going to get into insurance, and nobody actually knows the ins and outs before you're in it. So I think that's great to hear. So you have the ability to kind of see into some of the best run firms, privately held firms in the country with Assurex partners, but also, as you mentioned, a great vantage point of kind of the industry and what you're seeing agencies and companies do, right, wrong, or indifferent. Where do you kind of see the state of the industry today? And then, where do you see that going in the next 3 to 5 years?
Yeah, Elliot, I guess I would preface it by saying, I don't have a crystal ball, right? I mean, I
Yeah.
just don't. But I think there are some macro trends that I believe will absolutely continue, and maybe in some cases accelerate. So, I think a real core macroeconomic trend is consolidation, and I think that will absolutely continue. I don't see that slowing a bit. And by the way, for the end consumer, um, that's probably not a terrible thing, right? I mean, in some cases, macroeconomic trends or macro um, technology trends shift business decisions, but that doesn't mean a bad thing necessarily for the consumer. That happens across all industries. So I think consolidation will continue in the insurance distribution space, just as you've seen it with your local restaurants or your local law firms or your local gas stations, or there's consolidation across a lot of different industries. If anything, maybe our industry was a little bit of a late adopter to it, but so I think you'll see that continue. That doesn't mean, though, that there's not incredible opportunity for really well-run privately held firms, right? I mean, you think of the best restaurant you go to, and I know for me at least, it's a locally owned restaurant. I think of
Yep.
the law firm I work with; it's a locally owned law firm. I think of the investment advisor I work with; it's a locally owned investment advisory service. Now, they certainly gain scale from a number of different attributes that are available relatively openly now. But the best entities that I work with across almost any industry are entities that are locally owned, and the people providing the service are actually vested in the relationship. So I think consolidation is going to continue, but I don't think that's necessarily a bad thing, either for our industry or for the individual consumer. So I think that'll continue. I tell you, I think another one is specialization. Continually at a lower price point, consumers want someone that understands their business. When I was out very actively seeing clients, it was difficult 10 years ago to go to a preparatory school in the morning and then go to a construction firm in the afternoon, right? The insurance risk is significantly different. How it's underwritten is completely different, and so to really specialize and understand those businesses was a big challenge back then. Well, it's much more so of a challenge now, and I think that consumer at a decreasing price point wants someone that really knows their business. So we spend a lot of time with Assurex firms helping them really specialize and get good at specializing in a space. So those are just a couple of things that I think I see that will actually continue and I think accelerate.
Dean, going back real quick to consolidation, from your vantage point, why are firms selling out and consolidating?
Yeah, well, I think Ryan, it's you see bodies of work that will say it's either fear or greed, right? It's one of those two things. And I would submit to you that if you have a well-run organization that is built for the future, greed would drive you to keep it, not sell it. I mean, think about that. If I had an equity that I felt was performing exceedingly well and had a propensity to outperform the market in the future, I sure as heck wouldn't sell it. I disagree with the thought that greed is driving the sale of great agencies. I don't buy it. Similarly, fear. If you look, I think at roughly the past probably 60 quarters of performance, insurance distribution has underperformed the market in only 2 of the last 60 quarters. And I could be wrong on the exact stat, but directionally, I'm quite confident in that. Insurance distribution as a sector continues to outperform. And so again, fear doesn't really feel like a very good answer to that either. What I would say though, Ryan, is I think there are macroeconomic trends that cause a sale of a business, and there are micro trends that cause a sale of a business. Macro would be those things like technology shifts or capital structure shifts or labor market shifts that a firm wasn't prepared for, and now they see a big challenge coming their way because they weren't ready for it, and now they're selling their business because of those macroeconomic forces that are now being applied to that business. From a micro perspective, I would say, a great insurance distribution entity generally has 3 things. They have really strong leadership, highly competent leadership. And I'll self-promote here for a minute. If you look at the CEOs and C-level of Assurex partner firms, they're among the most astute business people I've ever known. I mean, they're phenomenally good business people. So strong distribution organizations have great leadership. They have strong strategy. They understand what they're doing and why they're doing it. And they have a capital structure to support their ongoing strategy and leadership evolution. So they have 3 things. On a micro sense, if one of those things is missing, then the firm sells. I.e., if current leader isn't confident that the next leader is going to be able to continue to outperform the market, then they want to take chips off the table. So again, I think there's macro trends and I think there's micro trends, and it's I don't think there's probably any one reason that causes sale, but there's big system trends and there's small system trends, and they all play a role. They all play a role.
Yeah. That's great insight. I mean, I kind of put some of those things that you're referencing in the fear bucket, right? Fear of not being able to get access to capital, or the next generation's not going to step up from a leadership perspective, et cetera. That's driving some of it, which is interesting. But
yeah, and I think Ryan, I would agree with you there. I think that's exactly what it is. There's a fear of what's coming next, and yet you think about it, entrepreneurs in general are wired and designed such that they say, I'm going to see that fear and I'm going to accelerate through it. And certainly that's what you guys are doing. I mean, at Hildebrandt, that's what you guys are doing.
For sure. Well, yeah, demographics play a huge role, and probably your willingness to go through that fire, and depending on how big the fire is and where you're at in your life, the life cycle of your career and whatnot. So
yeah, no doubt about it.
Well, I'd be curious to continue on that note, Dean. Of you mentioned, the leader coming to the end of their career, or second half of their career, looking at, do I want to take chips off the table? Do I trust in the next layer of leadership, the next generation, to continue to outpace market returns? Let's say. I feel like, and we talk a lot about that being one of the bigger problems. If you're in that position as a leader and you don't feel like or haven't planned for that next generation, it's really hard to see how you can get there at that point, because now you have more of a finite number of years to do it. And that, in our experience, it does take a long time. You have to start planning that early. And a lot of times what we see in firms we talk to is like leaders got their head down building their book of business to build the firm and, do all their stuff. And they don't necessarily sometimes come up above the water to say, all right, where am I at today? How am I going to be able to perpetuate this thing, and who's coming next? Until they get to that point at the end, we're like, shoot, I really don't want to sell. Like, there's no reason for me to sell other than I don't know who's going to be able to take this thing over. So, what's your feeling around that in firms that you talk to and see every day?
Yeah, you definitely hit on something there, Elliot, and one of the really interesting elements of that to me is there's probably more resource available today to help develop and generate that next generation than there's ever been before, right? I mean, certainly firms like Marshberry, Insight, Larry Linney, Reagan and Associates. There's a number of firms that do phenomenal work in development of next generation leaders. Certainly we as Assurex do a great deal of that work. We do it again for a very narrow constituency, but there's a number of great resources available. But if you're looking at that saying, well, I want to have somebody ready in 36 months, that's just not reality. It's just not reality. It's a process, I think, that starts 10 years before the need is there, not 2 or 3. It's got to be part of the strategy going into the organization for the long-term evolution of that firm. So let's be real about it too. If you think about running a firm, an insurance distribution firm or advisory firm, if you think about running that firm, let's say 20 years ago, I don't know what the average size would have been, but it certainly would be dramatically smaller than it is today. So you wouldn't have necessarily the people development issues you have of today, the technology issues you have of today, the capital structure, sophistication that you need today. So it was simply a different game 20 years ago than it is today. And so today you need leaders that are able to do all of those things. And oh, by the way, see down the road that you need to be developing people that will be even more sophisticated 10 years from now. And it's not for the faint of heart. It's not easy, which again, I think goes back to why we see a fair amount of consolidation, because I think many times firms just aren't ready for it.
Yeah.
Do you feel like the risk management industry has been slow to reinvent themselves, which could be leading to some of the causes around perpetuation planning and whatnot? And if so, I'd just be curious on your thoughts on why. We see the tech industry in so many facets just blowing up, and you see how even banking has gotten very creative, and wealth management, financial planning arenas have gotten very creative and are really out there struggling in the weeds to bring more value. Do you feel like the risk management industry is a step behind, and why?
I don't think so, Ryan. I think some firms are behind. I think some firms certainly still see the world as their role is to solely distribute the product that the carrier provides to them. But I think the best in our industry, and there's a lot of them that see the world as being true risk advisors, being true value-added service providers, and the firms that understand that, you see them performing at an exceedingly strong level. I mean, you look at the firms within the Assurex model, whether it's Horton in Chicago or RCM&D out in Baltimore or Woodruff Sawyer out in the Bay Area, certainly IMA up in Denver and Kansas. I mean, those firms and they're just ones that come top of mind, but I could go down the list, and those firms understand they are a value delivery mechanism, and they're incredibly good at it. They've gone well beyond simply seeing themselves as a purveyor of what the carrier has for them to sell. It's just a different model.
Mhm.
So I don't think. I think there are portions of the industry, yes, that are behind, dramatically behind, and those firms I think will be sold. There are also firms that I think are leading the pack and well ahead of the race,
Yeah.
and the value they deliver to clients, I think, is evolving every bit as fast as technology and other service industries will allow.
Yeah, it's awesome perspective.
Yeah, let's dive into that a little bit. What are you seeing in those firms, general trends that they're doing that is that much better, that is leading edge to other firms in our industry?
Yeah, well, I'd go back, Elliot, to a little bit of what we talked about earlier. I mean, the specialization of some of the firms is just absolutely incredible. They and I don't want to necessarily start naming names. That just doesn't quite feel right. But we have a number of firms that are leading the risk management strategy for industries. So you take something, whether it's something as old school as the towing, tow trucks and towing business, and we have a couple of firms that quite literally help carriers write the policy and understand how that risk should now be insured in today's world, or something as new as CBD and understanding how that should be insured. And so we have firms that are so deep into those industries and specialize so much in those industries that when they are out selling to that consumer, selling to that business in that industry, they're providing dramatic value to that entity. They really are. And I'd go back, Elliot, back to when we had our own agency. We did a lot of life science and tech business, and in that space, we literally had people that had MBAs in that were selling risk management into that space. So really incredible specialization in that space.
Yeah. Yeah, I can definitely see that's been a big trend, I think, that we've seen too. And it just, to everything you talked about earlier too, it just makes a ton of sense. The pace has picked up as well. I think 20, 30 years ago, a good new business year, talking in revenue, might be 25, 30,000 or whatever. Certainly firms doing more than that, now top firms their producers are expected to hit 100, 125,000 of new business revenue. So I think the pace has picked up, but which makes it all that much more difficult to be a generalist going from one industry here to another here. You have to reinvent the wheel every time.
Yeah.
And what we find that causing is that you stay very surface level. You can't go deep because you just don't have the time. You aren't exercising the muscle of working with a contractor day in, day out, hearing the language, hearing their problems, all those things. And so it doesn't allow for that more expertise, that more specialization. And so I definitely see that as a trend, moving forward, and a big opportunity too right now, because there are firms that are doing it, yes, but most of the industry, I would imagine, certainly at the firm level, if not the producer level, are generalists, and they're just doing whatever they can and doing whatever walks in the door and writing insurance,
Yeah, and I
I think
think
it's
again,
go ahead.
I think that's going to absolutely continue to evolve, and specialization and using data to really inform that specialization is going to continue to accelerate and be more of an impact maker in front of the prospect and client. I think that's critical to where strong production and strong advisory service firms evolve.
So staying on that note too, if I'm a generalist producer right now, are there anything that you could point to, if I wanted to start to specialize, if I wanted to get more strategic about what I'm doing and specializing in, what would be some of the first steps you'd recommend that person do?
Yeah, it's interesting, Elliot, because when I look at firms, and you're right, I see a lot of different firms, and truly the best firms in the world, and they really start approaching the business almost like they're, back in graduate school, you would literally create business cases for projects to work on, right? So, and great producers now, I see them preparing their business plan almost like they're preparing a business case. They're looking at a marketplace, they're looking at the total size of that marketplace, what the differentiators are, on a granular level, what those prospects look like and what they're looking for, what's going to resonate with them. And then they put together a marketing plan that really drives success before they get in the door, before they get to the appointment. So really sophisticated producers now, I think, are looking at the world through the lens of sophisticated business people. They're creating a business case and preparing to go serve a constituency where they know they're going to have a better than average opportunity to win, and they do it real effectively.
Wow, yeah, I think that's spot on. I don't think enough producers kind of take that ownership of that. I think it's a lot of times like, well, my sales manager or somebody will let me know what I'm supposed to do type thing. And really taking ownership of that at the producer level is so key. And you mentioned the data side of that. I know that, Assurex as a whole does a lot with data, but I would even take that. A lot of times that seems like a big mountain to climb, right? But if you're a producer, your data can be go out and talk to your book of business already. Go out and talk to 10 contractors, go out and talk to the 10 churches that you have, or however your book breaks down, and just see what they say. Have a different conversation with them. That's your data points. That's how you can figure out, could I build a specialty here? And also, Ryan and I talk about this a lot, so I'll let you chime in too, Ryan. But is it better to let your niche or your specialization kind of naturally progress, or is it better to say I'm starting out day one, I'm going to be a specialist in construction, and I'm going to build out the steps to do it. Both can be effective, but if you're a producer seasoned with a book, I think looking at your book, getting out and talking to current clients, seeing what naturally progresses is a good avenue as well. But Ryan, I know you and I talk about that all the time too.
Yeah, it's a common theme here between Ellie and I and on the podcast. And I guess, Dean, I'd ask you a question on the heels of Elliot's thoughts. Do you feel like a risk advisor has the ability to create value within a specialization without any concessions from a carrier? Can they, drum up enough value with all the things that you mentioned without having to go back to an insurance carrier and build out a program that's going to help them from a rate perspective and whatnot?
Well, I guess, Ryan, I would say empirically, yes, right? I mean, yes, because that has to be true, given at the top end of the spectrum where there's so much self-insuring from a client. So that clearly is not the carrier providing that. That's someone else providing that. So I think at a highly evolved risk management firm, yeah, they are providing the specialization, and they're providing the knowledge transfer to help those businesses perform better, and it's not the carrier at all. Now, that's not to say that I think in mid-market, carriers who have specialization, can perform wonderfully well and really partner with brokers on a very strong manner to deliver for customers. I know, tech and life science, we worked with Chubb and with Travelers extensively, and we worked with their teams and leaned on them a great deal as a middle market broker and doing middle market business. I think again, as you go up market, once you get into captives and other more risk management techniques that become leaning towards self-insuring, then it's more the risk advisor that is carrying more of the specialization and knowledge.
Yeah. I think it's a good exercise for firms to do as well. I mean, we don't want to necessarily rely on our carriers. We want to use that as a tool when appropriate, but we want to build the value as well for our clients that they look to us for that value as the advisor, right?
Yeah, and I think Elliot, to your point, you can get a great deal of information simply by understanding your current clients. To your example, if I'm out and I have 10 churches that I work with, understanding those 10 churches gives me a great sense of what it would take to go deliver value to the 11th. And I think that's absolutely a big part of it. Now, I wouldn't advocate for any generalist producer to say, okay, get rid of 2/3 of your book so you can just specialize in one thing. I wouldn't advise that.
Yeah.
But I would advise newer people into the industry to have a specialization, have 2 or 3 industries that you're going to know as much as the business owner knows. And to the more experienced people, you're going to lose some accounts every year. So as you're replacing, work into a specialization where you become a knowledge provider for those firms, and where you're providing knowledge and value on that level. um, you're not going to get fired because someone else had a 2 cent cheaper rate.
Yeah.
Yeah.
Yeah. So I think that's a good spot on that one. Like, that's a lot in. So the three buckets that we're talking about earlier that you're referencing for well-run firms have solid leadership, strong strategy, and a capital structure to support 1 and 2, right? And we've been talking a lot about particularly probably strategy and things that we can do from a strategic perspective to grow and whatnot. I'm curious though, the number 3 there, to pivot for a minute. I don't think that unique capital structures is explored a lot in our industry or talked about, and I'm curious what you meant by the capital structure to support 1 and 2, the different options that are out there. Just what do you mean when you say that we need a capital structure to support 1 and 2?
I think in any business, right, they need some level of capital to redeploy back into the industry or back into the business. So if they are, in many firms, that's going to be profit that supports it. But especially in our industry, in insurance distribution, it's more than just the profit of the firm. There's also M&A capital that's required. There's also capital for technology purchases, for staffing. You need a balance sheet in today's world. It's a little bit different maybe than it was 20 years ago. So I think you have to have a capital structure and a capital strategy to support what you're trying to do. Now, conversely, I would say strategy and leadership come first, right? The capital structure should support leadership and strategy. If you have all the capital in the world but don't have leadership and don't have strategy, that's just a great way to take a lot of capital and make it a little capital.
Yeah. Yeah. The reverse of what we're talking about, right?
I think so.
No, I think that's super important. I mean, so if you're a firm, high growth firm, let's say, and you're trying to get to the next stage, is there, outside of just reinvesting profit, is there anything that you've seen that firms have done uniquely to go get maybe outside capital, to utilize debt, to anything that maybe I'm already reinvesting my profits to a very high level, and or I'm buying out another shareholder, so a lot of my profit that I'm bringing is going to that. Like, how else could we go get capital from a strategic perspective to support our strategy?
Yeah, so in that space, Elliot, I think is really interesting, and especially at the current evolution of our industry. There's, when I started in this industry, if you wanted to take debt, um, banks really didn't understand this industry. So as an owner of an entity, my house was on the line. I had to pledge my house and all my personal assets and everything else. Now, lending institutions, debt facilities certainly understand the value of this industry, and that has now become a professional transaction, not a personal transaction. Further, on the equity side of it, on the equity portion of capital, you see a number of firms, both anything from family office type facilities to private equity firms to all sorts of capital providers that are now interested in joining firms even on a minority equity level. And so certainly within Assurex, we've seen that, as IMA very publicly has taken minority level equity investment into that firm, and it's certainly accelerated their growth opportunity, and they've used it incredibly effectively to support growth. Our partner firms, Unison, which is the combination of RCM&D and Oswald, have done just an incredible job. I mean, truly amazing what they've done by taking minority capital from Peloton, and which is essentially funded largely from Canadian Teachers Pension, and which is my understanding. I
Not
believe
the
that's
bike
accurate.
company. Not the bike.
Correct. Not the bike company. No, not the bike company. No, investment company. And they similarly have taken a minority share of equity and will use that equity to help generate the fuel to grow that firm. So, the availability of capital is greater today than it's ever been in our industry. Now, the providers of that capital are astute business people, right? They want to know that there's leadership that they can believe in and count on to deliver results, and there needs to be a strategy that the capital provider can believe in that will deliver results. And I would share with you that those firms are delivering outsized results. They're delivering strong results, and that's what happens when you have very strong leadership, a great strategy, and then the capital support to support those two.
Yeah. I think it's an exciting time in the industry from that perspective, for everything you mentioned, just because the opportunities are, there are way more opportunities to get capital to grow and to do the things that we want to do. And as we're seeing, there's a lot of these younger firms, newer firms that might be, maybe their firm sold to a large national or something, and they wanted to break off and start their own, that are just doing some really cool stuff. They're nimble, they're small, they can pivot. And I think once they get their models figured out, they're gonna be in a position to grow quickly because of access to capital, because of things like this, where they don't have to sell, to your point, to majority of the firm. They don't have to go get PE money or things like that. There's just so many different opportunities out there.
Yeah, and it's interesting, Elliot. You look at a firm today, and if there's a sole individual today that said, "Okay, I want to go start my own agency tomorrow," well, you know, working with Applied Systems, they could easily have their own CRM system with an incredibly rich array of automation all around serving the end customer. Um, Carrier contracts, if they don't want to get them directly, there's any number of entities that they can go through to access carrier contracts. Um, Base level service support is available, whether it's through Resource Pro or Patra or services like that. My goodness, I mean, it would take you about a week to figure out how to stand up your own agency as a sole individual. And I can tell you 20 years ago, that wasn't remotely the case. There was no way you could do that. And so to some extent, it's easier than ever to be entrepreneurial in this industry and to really carve out a niche for yourself and do something special. Um, and yet at the end of the day, it's all about the customer. It's all about that end consumer, that are you really delivering a product and resource, knowledge, to be something more than just the guy that or the girl that has the insurance policy? Because if you're only delivering the insurance policy, if that's your sole value, well, we just stated that there's not much value in that anymore.
Yeah. Yeah.
So it has to be something more than that. So firms that do that either individually or figure out how to do that within systems and structures, and it's a bright future. It really is. It's an incredibly bright future.
Dean, I got a one-off for you real quick before we wrap up. Part of this is just my thoughts. I don't have any evidence to back any of this up, but when I look at other industries, the way that the end user pays for goods and services kind of helps articulate the value, right? Of it shows where the value lies, if you will.
Yeah.
And the insurance industry, doesn't operate like that. We still get paid to deliver our value through delivering a product. So I guess my question is, is there any point in the future in which you envision where we could completely strip out commissions and charge a fee for the services that we're providing as risk advisors?
Yeah, Ryan, it's a really interesting point. So I gave a talk about 3 years ago, and part of that talk was one of the long-term trends I see in our industry is transparency. And think transparency, not like Elliot Spitzer transparency, as in what's the contingent income you're getting. Don't think about that as transparency. Think about a transaction with Amazon as transparency, where if I buy something from Amazon, I know what the product cost, I know what the government is taking out of it, I know what the shipping cost was on it, and I know any other value provider in that chain. So there is complete transparency. Everybody knows exactly what the costing structure was in that transaction. And I think that day's coming for our industry. I really do. And COVID actually probably slowed that down a little bit, but I think that is going to continue to accelerate as well. Now, again, on the smaller end of the scale, Joe's Shoe Shop on Main Street that has a premium of $1,000. What's that going to look like? I don't know that there will be as much transparency in that, but for the firm that is paying a mid six-figure premium, that firm is going to want to understand what the risk sharing cost of that is, what the claims processing portion of that is, what the advisory component of that is. I believe there's going to be much greater transparency in that in years to come.
Yeah.
And by the way, that's a good thing if you actually deliver value to customers, right? So if you're on the front of truly having a heart for delivering value to customers, that's a good thing, not a bad thing.
Yeah.
If you're sitting in your Barca lounge and waiting for your next renewal, and having your service staff take care of it, well, it's not as good a thing then.
Yeah. Yeah. Or if you're on the smaller end of the spectrum, right? If your target market is the $1,000 in revenue shoe shops, it's going to be hard to articulate a certain amount of value for what you're getting paid.
Yeah, absolutely. And I think in some of those cases, you'll see insurance embedded in product that will disintermediate the insurance transaction completely. And again, that's not a bad thing. It's just an evolution of how an industry changes.
Yep, you're already seeing that in some cases.
Absolutely, yeah,
it's out there, yeah, for sure. So, well, wow, that was an awesome conversation, Dean. I think we could probably continue going all day, but I enjoyed that. I appreciate you spending some time and coming on. And I know you're a busy guy and going to be doing some traveling here. So stay safe.
Yeah. Hey, guys, I appreciate it. It's always fun to see you guys. I hope to see you back in Nebraska again soon. Be well and take care. Thanks for the time today.
Thanks, Dean. Talk soon.
Thanks, guys. Bye.
Thank you for tuning in to Getting Past the Premium. We are excited to continue breaking down barriers and finding solutions together. If you would like to reach out regarding anything you heard in today's episode, find links and contact info in the description. Until next time, have a great day, and let's continue getting past the premium.